Hello, folks. This is Drew Rathgeber and Steve Wade with your weekly update. Sorry for not being around last week. We had Steve was traveling out in California, but we're all back and we're here to do another week. And this is just some things that we're looking at. This is not specific trade recommendations, just markets that we are looking at and just kind of letting you know where our heads are at. If you have any questions or need specific trading recommendations or any help at all, please reach out to Steve or myself. And just to let you know, Steve runs Wade's Trade, which is his advisory service as well. But anyhow, thank you guys for coming. Steve, how are you doing today?
Pretty good, Drew. I'm glad to be
Good.
back.
Good. So you got some rain out there in California, I heard.
Yeah, it rained every day. And, so that song was a lie. It never rains in Southern California.
Yep.
Rained every day.
Yep. Gotcha. So, well, good stuff. Well, I know you've been eyeing this USD, the US dollar, and I think a lot of us have been, and we're all lots of gold bugs out there. And so you're going to do the USD, I'm going to do the euro. So why don't you go and start with the US dollar? And this is a continuous chart of the USD.
Yes. What I wanted to point out is that the dollar is on the verge of failing in terms of its daily cycle. You can see that red horizontal line there. That marks where the previous daily cycle low was. If the dollar drops below that, then it's going to be confirmation that the dollar is rolling over and forming it's going to roll over into an intermediate cycle low. I think we're on week 19 now. And so this would be in the timing band for the dollar to move into an intermediate cycle low. And that'll probably have ramifications for the commodities we trade.
Yeah, I would have to agree. It's been interesting. It's been like the best of both worlds. The USD was going up, and so was the metals, and for that reason, copper. A lot of the commodity markets were kind of an eye in this future inflationary pressure, is my gut instinct. And if we do this soft rebound or soft recovery, as everyone's talking about, you're going to see the inflation come sneaking right back in. And I think that's true with the PPI and CPI numbers this week. You can see a little uplift this week as well. So it'll be interesting to see how that works. So you want to go ahead and go to the next? Let's take a look here. So we got the S&P 500 right here on the continuous.
Mm-hmm. So the stock market is interesting. Right now, the S&P 500 closed nearly at a new all-time high, and it appears to be on the verge of breaking out. It's in day 22 of a new intermediate cycle, and that should be bullish. So I know there's a lot of news out there that is bearish for the stock market, but right now the charts are pointing to is giving a lot of bullish signals.
Yeah, I'd have to agree. I was a bit bearish myself the last, I would say, few months with this transition with Trump, especially towards the end of Biden's presidency. I was pretty bearish on the markets, but I'm starting to kind of change that tune a little bit as we find out more and more what Trump's plans are. And there's some big shock things that I think, I'm not going to get into specifics, but there's some big shock value I think the market's kind of anticipating. And I don't think it's in the news yet. I'm not going to talk about it now, but I think there could be a possibility of some shock value that will get these markets up and going.
Right. Who knows what's going to happen with the cuts that are coming from the Doge, and how much that's going to shrink government, and what kind of impact will that have on our economy?
Yeah, I know. So Trump's mentality, and we keep talking about inflation, but they want to try and get from what I'm hearing from Elon Musk, is that if they can cut about $2 trillion off the yearly budget, they can basically net neutral the inflation. Now, I don't know specifically how that's going to work. You're going to push all those people back out to the private sector. You're going to get money pushed around, and we know inflation can be quite sensitive. So I don't know if he's really right about that narrative, that if he just cuts $2 trillion, we're going to, that's going to net neutral the inflationary point. I'm not really picking up on a personal level. I still think we could still be really quickly put back into an inflationary pressure situation.
Right. Anything could happen.
Yep. So here's the S&P 500.
Mm-hmm. Same chart, but I zoomed it out. This is a, 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 weekly chart that goes out over the last And if you could focus your attention on the right side where you see these red arrows, and what I'm trying to highlight is that in the previous 4-year cycle, um, gold or the price of the S&P 500 became very stretched above the 200-week moving average. We're at the same exact level of stretch above the 200-week average as we were before the stock prices dropped into the previous 4-year cycle low. So this is one of the areas where I would exercise some caution. The near-term charts are bullish, but this is a big caution flag to me.
Gotcha. So you're short-term bullish, long-term still pretty bearish, where we can see it's some type of corrective activity.
Right. I'm just very cautious right now on stocks.
Yeah.
Now,
go ahead.
Okay. We move on to the next chart. And we can see gold has now broken out and is making new all-time highs. Despite the strength of the dollar this year, the price of gold has just been skyrocketing. And this is on the verge of what looks like to me to be a runaway move. And,
yeah.
I can't imagine what could happen with the price of gold if the dollar starts dropping. But right now, the price of gold is very strong. So first of all, you remember last month we were talking about gold trading in this triangle, and then it was trading into this horizontal resistance, about to make a new all-time high. And since then, it's just been going up and up every other day. So, and it's still relatively early. We're only in week 8 of the intermediate cycle, and so this could go on now for 8 to 10 weeks.
Yeah, I'm kind of thinking the same. I do know we, sell and may go away. The summer months typically, I'm not gonna say always, but quite often we peak out in the winter, early springtime in the metals quite often. So definitely, there's some upside momentum, and it could be that runaway situation, blow out all those shorts, basically get a short squeeze, just like we just saw in coffee. Get kind of a blowout, but you better be on your toes, because there will be a day where that reverses and they run everybody the other direction. So right. That would be my only word of caution is, it can run away from here, but come June, July, August, that's usually, I'm not gonna say usually, but quite often, we can get into a lighter, less liquidity and kind of run out all those longs and push everybody into a corner. So that's kind of what I'm sensing right now. So I agree with you. Another 8 to 10 weeks, some upside action, and then just be on your toes.
This next chart is the same chart that I showed last week on silver. At that time, we were bumping up against this $33 price resistance area. Today, we just closed above it. And so the price of silver tonight closed, I think, at 33.02. And
it jumped up. Yeah, go ahead.
And so it looks like to me it could make a quick run to 35 if it goes back to the highs from back in November.
Yeah, it actually jumped up after hours today, or on the open today, another 26 cents. I saw 33.26, I think it was, or 33.25.
Oh, wow. Okay.
So it jumped up like you're talking about. So it's getting that runaway thing. And so you're either, I know we're all positioned. I'm not going to say what those positions are. You and I are positioned well. I have nothing on the short side with it. I've been very cautious. But I know you and I are in position. So I hope we see that 35.
No, I do too. Or even more. But I just like to see it go higher. I don't care how much higher. I just want it to go in my direction.
Yep, exactly. So let's take a look at copper here.
Mm-hmm. Yeah, nothing new really on copper. The last time we met, I pointed out the copper looked like it was on the verge of maybe making another leg higher, that it would be one to keep an eye on. And sure enough, it took a nice surge higher, and I think it could possibly go all the way to $5 maybe on this move. It can go back to the highs from last May.
Yeah, I've been watching copper. It's kind of a leading indicator for silver. And I watched this move with copper as well. And I was kind of like, all right, silver, come on, now it's your turn. You know, I know we've all been sitting here waiting for it to get running, and I know a lot of us have had to be really patient, because why is it not at 37.38 right now? We keep asking ourselves, with gold at 3,000, you know, or close to 3,000. But I've been watching copper going, all right, you're getting in the lead here. Come on now, you're warming up silver. Let's get this going. So
That's right. Well, we talked in the last video about how silver usually catches up to gold late in the intermediate cycle. We're still early. And so
yep,
there's a lot of time for silver to catch up.
yep. And then that ratio was at 90-1. So, you know, I think a lot of upside potential there. So let's go and take a look at platinum. You brought this. No, actually not platinum. You talked about palladium last time. Let's talk about platinum real quick.
Mm-hmm. Yeah, I just wanted to end my part of the presentation on platinum. This one I think has enormous upside potential. The trend line you see on this chart, this goes back over the last 17 years. So the trend line you see started in 2008, just ahead of the financial crisis, and platinum's been in the doghouse ever since. Hadn't really gone anywhere, but just tonight, if you can go on to the next slide, Drew, the price of platinum peaked above that 17-year trend line. Now
Yep.
it did find resistance at the October peak, and it backed off, but it did break that trend line. It didn't close above it. I'd much rather see it close above that trend line, but I think platinum is on the verge of maybe breaking out, and it could run a very long way if we can get a breakout and a close above that trend line.
Yeah, it's always a battle at these areas, right? Just like silver's going through, and you just kind of sit here and we all kind of grind it out. And it, you know, when I'm looking at this here, you know, we all want to get, you know, close above it for 2 or 3 days, but you can end up taking, you know, a week or two, you know, for these battles to kind of play out and reestablish itself. But we watched a similar pattern actually in silver with the triangle, and it popped over it, and it's been, you know, rocking and going up. So hopefully this kind of follows the silver pattern. So, all right, let me go ahead and, huh?
That's all I have.
All right, well, let me go ahead and get to my side. All right, so let's go ahead and take a look at a few markets that I've been looking at. We've got the NQ here. You can see we're poking above these two highs right here. To me, it's really showing a lot of strength. So I wouldn't be surprised if this thing kind of pops up, and we could possibly challenge that 22,443 area. Then eventually it would probably come off and come back to these 15 and 45 moving averages. But it's poking above. It wants to run, and kind of another little short squeeze right here. What I'm looking at possibility of happening on the NQ. Let's take a look at crude. Saw this earlier. This is just off the daily chart. We are getting a little bit, well, I should say we had a peak on January 15th. We have definitely come off, but I'm looking at this bearish momentum change right here, but I'm not totally 100% a believer in that. You know, I think just like you had some other ones back here where you had some upside and, you know, we had a downside and went straight back up. I'm not a full believer that this is going to be holding here, depending on what the stock markets do and all the inflationary pressure. So right now with crude oil, I wouldn't be looking to get short just based off of this. You could be looking to get possibly long, but again, you know, manage that risk accordingly. But I'm not a big believer that this is going to be turned bearish here on the crude oil at this moment in time. I think this is kind of a false signal right here. Treasuries, I've been noticing, here we go. I trade a lot of 30-year bonds, but this is the March. I'm noticing, I was talking about a momentum change right here. We're getting it, but again, of course, it's chop, and it's going sideways. I probably very short term, probably going to come down. But I think it's going to continue chopping sideways, and I'm hoping for a momentum change going back up to the upside, because we all know Trump wants lower interest rates, but it's going to be a chop and a battle to get there. But I think eventually in the next 3 or 4 weeks, we will get that momentum back up to the upside, as Trump wants those interest rates to be lower. Silver,
talking about that interest rates were going to go a lot lower.
Yep.
And I don't know, he probably knows a lot of things I don't know. He's got the right hand of the president. So, but if that happens, the bonds could be a place to look at doing some trading. And it's kind of like you were pointing out there, the prices under the 10-day moving average on my charts. I know you use a 14 on yours. And, if we can get a close above that moving average, that would probably be a good place to initiate a position.
Yeah. And you can see actually just for entertainment right now, this is the weekly chart, and this right here can indicate kind of a reversal where it just kind of really popped down and it fired right back up, as you can see right here. And that type of move that you see right here can sometimes indicate kind of a reversal pattern, but we got some more work to do. I'm not saying it's reversed right now, but it's definitely, I think, going to start working on it. I mean, we've been going down, and that's the thing too. You talk about cycles, it's been going down since September of 24. So it's definitely, and I've always told people, you look at every market, it's going to do 6 to 9 months a direction and 6 to 9 months the other direction is kind of my thesis in my brain. And so it's really kind of done its run here. And I feel like there will be kind of a momentum change back up to the upside on the bonds. So let's go and take a look. So he did the USD. I'm going to do the euro. It's kind of an inverse of the USD. Here is the Euro FX March contract. I am seeing the slight momentum, not confirmed yet, but slight momentum change. So like you said, the USD coming off and it's looking quite bearish. And so this is becoming, these two moving averages are starting to tighten up a little bit. I would say keep an eye on this market for the next week. We should have an answer on this in the next probably 5 to 8 trading days as this tightens up and we get a confirmation. And just to let you know, when we get a fresh cross, I tend to personally like to get pretty aggressive. That's just me. It's not perfect. You can still get bounced out. But when I do see a fresh cross, it kind of makes me excited, to be honest with you. And then I'll zero in. So like this is a daily, then I'll jump to a lower time frame and look for an entrance into that market. But I'll use this as a directional, or what I call my guidance chart, and then go ahead and start going to a smaller time frame, looking for an entry. So if we do get a fresh cross, I will be looking at a smaller time frame to try and get into this market. So that's what I see so far this week. It's Valentine's Day tomorrow. Do you have any big plans with you and Connie tomorrow?
Well, if it depends on what time you post this video, I'm afraid to say what my big plans are for tomorrow. If you're going to post this tonight, I'm going to keep my mouth closed.
Gotcha. Well, my girl's not going to see it, but I've got big plans tomorrow, so I won't. I'll be out a little early.
Okay.
But in saying that, appreciate it, Steve. I always appreciate working with you. I know we've been busy, and I know you've been really busy and traveling, and we'll come back next Thursday or Friday and do this again.
Okay, Drew. Look forward to it.
All right. Take care. Bye.
Bye-bye.